Please read the disclaimer. Hello, beautiful people. Shalom, money makers. The crypto market just took a big sell off into the month of December. There is, though, a reason why this is happening. It's not because crypto retail investors decided, I don't want crypto anymore. No. The main reason is, well, you know what? I'm not going to spill the beans just yet. You're going to have to watch the video. All I ask from you is that you give me a beautiful smile to send out those good vibes. Smishity smash that like button. I'm going to give you a little bit of a hint. Arigato gozaimasu. Okay, now we can get into it. So currently, XRP is sitting at $2.05, down minus 4.5% on the day. Bitcoin dropped all the way down on the low here to 85,500. Ethereum dropped under 3,000 once again with the low at 2,800 range. XRP was able to hold $2. So even though we had that sell off here, XRP was able to hold $2. It bounced off of that. But it's basically the whole market kind of dropped till around that 739 zone, right? My time, right? And then it kind of bounced off of that. If you've been watching the videos for the past few days, you know that I warned that we could see a continued pullback, right? After we looked at what happened last time, we had a very long gap that was closed. We saw volatility, right? We went up and then down and then up and then down. So the fact is that Sunday night, which in general is a very tricky night, right? Sunday night into Monday morning, historically, we've seen these sell-offs, right? Doesn't happen every week, but I'd say like 3 or 4 times out of 10, we see a very nice sell-off into Monday morning. This time it's more coming from the Asian markets, the East Asian markets. We'll talk about that in just a second. If we go and we look at the bubbles, you can see lots of deep red here today. Am I surprised? No. Am I freaked out? No. This is something that I was anticipating, something that I was getting ready for. I had this in the back of my mind that we could see a continuation of a sell-off. Moreover, the fact that the Fed chairman is talking today at 8 p.m. Eastern time put a little bit of not fear, but concern that the market could be volatile today, that there could be some sell-offs before that speech because we don't know what he's going to say. Anytime you have uncertainty, right, the market has a tendency to sell off. This is just how it is. When things are clear, when things are, beautiful, when people feel confident, they have a tendency to push a little bit more in. When there's uncertainty, when we don't know what's going to happen, are they going to reduce interest rates, not going to reduce interest rates, what's happening there, right? Then that puts a little bit of fear in the market. Although right now it's about 85.7% of a reduction, you can see here, right? Next in 1 week, in 2 days. So that will be very interesting to see how today plays out. You can see, by the way, that it was everything together, right? So we were getting close to the monthly candle closing. Sorry, the weekly candle. It closes at 2 a.m. my time. I went to sleep. I didn't see this sell-off. I went to sleep early last night. I woke up. I was like, whoa, what happened? But I wasn't surprised. And you can see here, as soon as it hits the new weekly candle, right, sell-off. Same thing here, right? New weekly candle, 2 a.m., right, sell-off. So that's a very interesting situation that happened. And listen, we can always take advantage of these kinds of situations. Again, this video is for educational and entertainment purposes only, not financial advice. Always do your own due diligence before you decide to invest. Very, very important. But we can take advantage of these kinds of sell-offs. If you are interested, our partner BYDFI will give you the opportunity to do so. You can sign up using my link. There are some sign-up bonuses that you can get once you sign up and deposit funds. We also have this big giveaway that's happening also on BYDFI. So if you are interested, link is in the description down below. It's to Moneymaker Avilev website. And then you scroll down here and you press BYDFI and you can sign up with your email and password, right? I will get a commission. Again, this is another way to support the channel. If you're already trading and you want to support me and use my link, I will get a commission. So thank you for that. Again, they are a partner of the channel. Please, please, please trade responsibly. Okay. We've seen leverage can make a lot of money, but you can lose a lot of money as well. So please be very careful out there. By the way, we did get a winner for the birthday Black Friday raffle. So if you're in the Discord, I announced it there. Sorry, not the Discord, the Telegram group. So the winner was announced there. So whoever won, I gave information what to do. So do that, right? So what happened? Right, 5 minutes in, 6 minutes in. What happened? Why did we sell off? Well, basically, what happened was that. All right. Basically, what happened was Japan, right? Japan's yen 10-year bond market just popped. And you can see here, Shanka, I think is his name. Hopefully I'm pronouncing that right. He says the chart that should, I don't know if terrify, but every portfolio manager on earth. Japan's 10-year government bond yield just hit 1.84%, the highest since April 2008, up 11.9 in a single session. You need to understand what this means. For 3 decades, Japan was an anchor. Zero rates, infinite liquidity, the foundation upon which global carry trade was built. Trillions borrowed in yen, deployed into US Treasury, European bonds, emerging market debt, risk assets everywhere. The anchor is now breaking. The Bank of Japan held rates negative while every other central bank tightened. They defended yield curve control while inflation returned. They printed while others drained. They cannot hold the line anymore. Japanese institutions hold approximately 1.1 trillion in US Treasury securities, the largest foreign position. When domestic yield rise from nothing to nearly 2%, the math changes. Capital that flowed outward for decades faces pressures to repatriate. I don't know. English is my second language, so if there's sometimes words that I mispronounce or don't know, excuse me. This happens precisely as the Federal Reserve terminates QT, precisely as the US Treasury requires record insurance to finance 1.8 trillion deficits, precisely as interest on American debt exceeds 1 trillion annually. 2 of the 3 largest buyers of US government debt are stepping back simultaneously. Third largest buyer is China. When the world's creditor nation stops funding the world's debtor nations at artificially suppressed rates, the entire post-2008 financial architecture must reprice. Every duration bet, every leverage position, every assumption about perpetually falling rates, this is not a Japanese story, this is a global story. The 30-year bond bull market ended. Most have not realized yet. Now listen, back about a year and a half ago, in August of 2024, we had, of course, the big sell-off, the Japan carry trade sell-off in August there, and it felt like the world, the financial institutions were ending. And what happened? Bitcoin dropped to 50,000 and it rallied all the way up, 100% after that. There's been talk about this, how every single time something weird happens in Japan, the market freaks out a little bit. We see a sell-off and the market comes back after that. Does it mean that this time the market is going to be okay? No. It doesn't mean that, but we have to take into consideration that this is an option that could happen in the market, okay? Liquidity is thin, and the fact is that when liquidity is thin, and we talked about that actually in more of an XRP related yesterday, that it will be easier to manipulate the price of XRP. As we saw that all assets started selling off at the same time, its retail was not sitting, or maybe retail in East Asia, But I don't think retail in the US was sitting, waiting for the new weekly graph and then immediately pressing the sell button. No, this was pressure that was happening because of what was going on in Japan. It could be that there was a big player that was unloading a little bit, but as soon as that happened for Bitcoin, probably it caused the rolling effect that the rest of the crypto market started selling off as well. Then you have liquidations, and every single asset, according to how much liquidation it has a tendency to sell off according to that amount of liquidation. We did see the fear go up to 28, out of extreme fear, and now back to extreme fear after 2 days. And it will, of course, if the prices stay where they are, we're going to drop down probably closer to 10 tonight. And it will be very interesting to see. Now, some of you might be saying, well, Avi, people kept talking about, quantitative tightening ending. And listen, in 2019, the Fed announced QT would end on August 1st. The balance sheet of the Fed continued dropping in August, despite QT having officially ended, because the last round of Treasury matures did not settle until mid-August. Just because QT ends December 1st does not mean that the balance sheet immediately starts going up. It might take until early 2026 to notice that. A lot of people, again, are talking about how first quarter of 2026 is where we're anticipating the market to recover a little bit. They also, many anticipated October to be very good and November to be very good, and that didn't happen. Short term, again, I don't know what's going to happen. I don't know what the president's going to say. I don't know what the Fed is going to say. Anything can happen, okay? Long term, I am still very bullish on the crypto market. Short term, weeks, days, I don't know what's going to happen, okay? And we have to be ready for every type of scenario. If you want to go short, then you need to be ready for volatility. If you want to go long, 6 months, a year, 2 years, 3 years, that's a totally different game plan. Okay, and that's very, very important to remember. There are some good news here from Ripple. So I know the beginning was like gloomy and sell off and all that, right? But we did have some good news here. Just in, Ripple receives approval from Singapore's MAS to expand payment activities under its major payment institution license, enabling end-to-end fully licensed payment services in Singapore. Very, very interesting. We talked about how I think that there are going to be a few hubs worldwide for crypto. I think it's going to be somewhere in the US, maybe New York, maybe we'll see how, maybe somewhere San Francisco. I don't know, we'll see where, because things are shifting in these cities. San Francisco, right? Tech is leaving San Francisco, and we'll see where it ends up becoming. Dubai and Singapore. I think those are going to be the three strongest cities around the world where there's going to be a lot of crypto action, crypto companies, crypto development. After being in Singapore a few weeks ago, I really like Singapore. One of the, I felt very safe there. It was so clean. I saw a few guys, the two guys. You know how there's the machine that buffs like the floor at the mall or at the office building or wherever. So they were cleaning, right, the sidewalk with one of these. I've never seen that before. So that's the situation there in Singapore is so clean. So everything was just amazing there. So that's a little bit sidetracking, but the fact is that there's a lot of business there. There's I just read an article that the most talents right in the world are actually in Singapore, like tech talents. So very, very interesting that happened. And on XRP ETFs, this is very, very interesting. And we knew that there's going to be a lot of activity because we knew XRP ETFs were going to be popular, right? But this is one of the things why I said that I thought that BlackRock was losing it a little bit. The fact is that Canary Capital says why the first mover advantage can be so important in the ETF space. Canary just issued press release stating that XRPC is larger than all other spot XRP ETFs combined, right? That's huge, right? What we're seeing with XRPC is more than early adoption. It's validation of where investors' demand is heading. This is interesting because we thought maybe Franklin Templeton would have a leg up, but no, the first one got most of the liquidity, right? And the others, we'll see, right? Again, if BlackRock comes in, high probability maybe the people will jump over from Canary. But if the fees are good, so people will stay. And so I think BlackRock maybe missed out, but we'll see. We'll see what happens with BlackRock in the end. Again, this video is for entertainment and educational purposes only. Not financial advice. Always do your own due diligence before you decide to invest. Remember, I'll never contact you on social media asking you to sign up to anything or send me anything. Those are scammers, imposters. Please be very careful out there. Don't forget to drop a comment, 8 for infinity and beyond. Subscribe to the channel and don't forget to smash that like button. Check out the links to BYDFI if you are interested in supporting the channel that way also. Thank you for watching and I hope to see you next time.